Since the beginning of the year, the S&P is down 8%. The Nasdaq and the Russell are both down 11%. Looking at the down moves that we've had since the beginning of 2022, we can fairly wonder, is selling naked puts something that you should really do with your capital? That's what we're going to see in this video. I'm going to talk about how I manage my naked puts, looking at this sell-off that we've had since the beginning of 2022. What do I plan on doing if the market starts coming back and starts grinding up again? I'm going to explain all of this in this video. I'm not teaching you anything. Last week was pretty hairy, let's put it that way. It's not the worst that we've seen like in the history of the stock market, but it's clearly a down move. And compared to 2021, 2022 seems that it's going to be a lot more volatile. But you know what? It's actually good. Compared to what we had in 2021, that's for sure that the markets got more volatile, and especially with last week, if we look at the S&P 500, you can see that it got a lot down very quickly. I mean, we've had a pretty rough week. I think it's been like more than a year that we had such a volatile week, and it brought a lot of volatility back into the market. And the way I'm training myself is that I'm going to sell a lot of naked puts on different stocks. That's something that I've been doing obviously for the whole 2021, looking at how the market was grinding up, and I still plan on doing it now. But obviously when we have this type of down moves, I'm a bit hurt, and here's what I mean. If we look at, for example, my portfolio, you can see that basically since the beginning of January, I'm down $1,346. So that's obviously because the market went down also. As I'm selling naked puts, I'm overall bullish on the stocks that I'm selling puts on, so when they're going down, I'm losing money. It's no surprise here. So does that mean that selling naked puts is a bad strategy? Because you see that I'm having a drawdown of around $1,300 since January 1st, 2022, and we've had honestly a terrible start of the year. So does that mean that selling naked puts is bad? Well, it's more complicated than just saying is it good or bad, because we need to compare apples to apples. I'm down $1,300 on my portfolio, which pretty much equals around 4% of my total capital that I lost in paper value. And if we look at the S&P 500, it lost 8% since the beginning of January. So yes, of course, you know, I lost money selling naked puts. Didn't really work in the first 2 weeks, 3 weeks of January. But compared to, for example, what the market is doing, well, I'm actually doing a lot better. I'm losing twice as less. So obviously I wish I wasn't losing money, but you know what? You can't be right all the time. Sometimes you lose, and that's just how it is. So I'm not really bothered by this because I know that the market is going to come back at some point. I'm fine with rolling my trades. And as you can see, like, I'm not really leveraged that much. So it's not really a problem for me when I see a small short-term drawdown, especially when I see that that drawdown is half of what the S&P 500 has been losing since the beginning of January. So what should I do with this drawdown? Should I just close my trades, take my loss? What should I do with that? But one of the most important points, and the reason why I'm also quite calm when it comes to this type of drawdowns, is that I've been trading small since the beginning. And that's exactly the sentence, selling puts work until it doesn't, because obviously when you're going to have the market go against you, and it will happen, if you think that it won't happen to you, it will happen at some point, that's a fact. Well, you better have traded small when you were selling those puts, because when it will go against you, you need to be able to sustain that potential drawdown that you're going to have when the market goes against you. So what does it mean trading small if we want to be a bit more practical? Well, personally, I rarely exceed 25% of my buying power usage when it comes to selling options. I'm usually going to sell options to the point where in total, my overall capital used is 25% of my overall capital. And personally, I found that this was a good balance for me, where I'm still taking advantage of opportunities, I'm still selling puts, but I'm not too over leveraged. So when this type of things happen, I'm not in too bad of a trouble. Like, that's absolutely sustainable. In the end, there's really no secret. When you sell calls, meaning that you're going to be bearish, you want the stock to go down, what usually is going to happen is that you'll be wrong more often than when you're selling puts. And when you have a market down move like we've had, for example, last week, well, your calls are going to come back from losers to becoming winners. And the reason is the market is going down very quickly, which when you sell a call, you obviously want the stock to go down, so it's going to benefit you. And when you're selling puts, you're right, more often you tend to have less drawdowns, but you know, you will have drawdowns where the market turn against you. That's just normal, that's just how it is. But the most important thing is not about how often you're right or how often you're wrong, is when you're wrong, can you actually manage that loss so you can come back out of it as a winner, or you can actually cut them maybe quickly. Whatever you're doing, it's not so much about the probabilities of being right or wrong as much as it is about how you're going to manage your losers. And that's exactly what I'm planning on doing with my portfolio. For example, when it comes to all those trades that you can see where basically I am in a loss, what I plan on doing is rolling those trades, rolling those naked puts that I've been selling to the next monthly expiration for a credit. And the reason I'm going to do this is that number one is going to give me more time to be right in the trade. So basically, I'm just giving myself more time to be right for the trade to come back in my favor. But number two, and that's probably the most important thing, is that by rolling my trade and collecting a credit when I'm rolling that trade is going to make my situation a little bit better. Let's say that I'm selling a put on a stock and my strike price is $20. When I'm selling my put option, I'm collecting $1. My break-even point for the trade will be $19 because this is a strike minus the credit that I'm receiving. Let's say that I'm rolling my trade for 50 cents of credit. Well, now my overall credit that I collected is $1.50. $1 for the initial trade that I placed and 50 cents for the credit that I received when I rolled my put. So now my new break-even is not $19 anymore. It's $18.50. So having a wider break-even, because now my break-even point is at $18.50 and not $19, what does it do for me? Well, basically that's going to help me in a very simple way. Instead of needing the stock to come back to where it was so I can come back at break-even for my initial trade at $19, well, now I only need the stock to come back at $18.50, so I'm back in profit after that point. So that means that if you keep doing this every single month, if you keep rolling your puts every single month for credit, you're going to widen and widen your break-even. So you won't need the stock to come back as much as you needed it to when you initially placed the trade, which is really the point of rolling. I mean, the point of rolling is not just to give yourself more time, it's also to make your situation better. So at least you don't need the stock to come back as much as what you needed when you initially placed the trade. That's why if you sell naked puts on quality companies, you don't go for insane stocks like Nikola or something. You try to go for stocks that are good companies with, healthy fundamentals, all of this type of things. You sell puts on this type of companies when the price is relatively low. Even if it goes lower and it's a quality company and you know that it's more of a short-term movement, well, if you keep rolling it and if you keep improving your situation by widening the break-even, then it's going to come back to you at some point. And of course, there are some stocks that never come back, like for example, RIDE. If you type RIDE, for example, and you look at the stock, that stock I think never came back. But that was not a quality stock in the first place. No one should ever trade this type of stocks in the first place. Let's say, for example, that you decide to sell puts on all the airline companies that have been going through a lot of trouble because of the pandemic. Well, now you know that this is still a quality business. The price is cheap because of what is going on in the world. And even if the stock goes further down against you, you know that it's more of a temporary situation and that it's going to come back in the future. So rolling and improving your break-even over time is not really a problem. But obviously, all of this, everything that I've been talking about in terms of rolling, improving your break-even, is only doable only if you keep trading small. Because if you trade too big, if you, just before, for example, we had that down move on the SPY, if you decide, to go all in, basically, the moment we're going to have a down move, you won't be able to sustain that loss. Your broker is going to call you, you're going to get into what we call a margin call, which means that you don't have enough funds to cover the positions that you currently have. And your broker is going to force you to either put more money into the account so you can sustain the drawdown, or you have to close the positions for a loss and basically lose a ton of money at once. That's why you need to trade small. And honestly, when you sell options, that's mostly the hard part, because you're never really done being disciplined, you're never really done being patient, and that's really what is hard when you sell options. But if you keep trading small, honestly, I've tried to do this myself. I'm not perfect, but at least I'm trying, to keep trading small and making sure that I don't overexpose myself. So when we have this type of down moves like we've had last week, it's not that much of a problem for me to roll my options to a later expiration and make sure that, I can sustain myself and I can sustain the trade by still improving my break-even point. But I know that it's easier said than done. I know it's easier to say after the fact, look, you should have traded small, you shouldn't have traded too big, because you don't know what is going to happen, obviously. But that's why I try to apply to myself some rules. For example, if the VIX is under 20, I try to sell mostly credit spreads. I try never to go above 25% of my buying power, regardless of where the VIX is. Even if right now it's around 27, 28 or something like this, I'm not really keen on going above 25% of my buying power usage, because I still want to have a lot of dry powder in case I need that money to sustain your drawdowns. But know this, right now we had basically an 8% down move. if we had the same that we had in 2020 right now, that would mean 4 times that move basically in the span of 3 weeks. And to give you some kind of context to see that actually it was not that big of a move that we just had last week, even though that's big compared to what we had in 2021. But if we look, let's say, compared to 2020, what we had right now in a week, you take that, you multiply it by 4, meaning 4 times the move that we had, and you put it over 3 weeks. That's basically the crash of 2020. So you see that, if you were really hurt by that move that we had last week, it probably means that you were trading too big. Because if that movement continues, honestly, I've got no idea what it's going to do. Obviously, maybe I'm going to post that video, it's going to actually come back up and everyone is happy, great. But if it continues going down, which is possible, it could be possible that the market just does another 8% down move, and it wouldn't be that big of a deal. We gained 30%, 25% in 2021. Now we would be like down 16%. It's going to make an average, basically. It's possible. So you need to be ready for this type of things, and you really need to make sure that you're not trading too big. And I know that it's hard when you only have, like, for example, few grand. It's really hard to trade small when you don't have a lot of capital, because you don't have all the room that someone with a 100 grand portfolio, 200 grand portfolio could do. But still, try to trade small. Try to trade only quality stocks. Try to only trade like cheap stocks if you don't have the capital to trade expensive stocks. That's what I used to do. By the way, I will put in the description of this video a link to a watch list of small stocks if you don't have a lot of capital. That's what I used to trade myself. I still, by the way, trade them to this day. So if you have a small capital, just go for that watch list. They're mostly liquid and they're quite good stocks. One of those stocks is American Airlines. Let's say that you want to, for example, sell a put on American Airlines. If we go in the March 18 expiration, and let's say we sell a put at the 15 strike, you only need $200 to open that trade, where you're going to collect a credit of $75. So you see that it's quite affordable. Even if you have a small capital, you can still trade this type of stocks, and still you're getting a good premium for honestly a very, very cheap stock. Well, that's it. I just wanted to show you a bit of an update on my portfolio, how it's doing, and I hope you find this interesting, where I try to, bring a lot of transparency in terms of, yes, of course I have drawdowns. Like, who doesn't have drawdowns at some point? But when you trade small, when you trade quality stocks, when you know how to roll your trades and improve your break even, then it's not that bad. Like, it just takes time, but if you're patient, it will come back in your favor at some point. Please make good and informed decisions. I'll see you in the next video, and in the meantime, I wish you all the best.